Hey folks, CA Rachna Ranade here and I welcome you all to a very interesting video wherein we are going to discuss whether we can earn some fixed income in this volatile market. So to kickstart this entire video, I would want to take the reference of the famous Harshad Mehta scam series. And in that, if you remember, in this specific scene, there is a scenario where Harshad Mehta asks his friend, कि यार इस इंसान में इतनी गर्मी क्यों है? एंड हिज फ्रेंड रिप्लाइज कि तू जिस इक्विटी मार्केट्स में डील करता है उसका डेली टर्नओवर इज अराउंड 20,000 करोड़ रुपीस, बट ये इंसान मनी मार्केट में डील करता है वेर इन द डेली टर्नओवर इज 2 लाख crore rupees. So whenever we hear or whenever we use the word market, we generally refer to what? Equity markets. That is the psyche of the retail individual investor. But you know, we have to understand that whenever we use the word market, there is a bigger market which is the fixed income market. Now the next question is that can retail individual investors like you and me, can we also participate in this fixed income market? And if that be so, what are the different instruments which are involved here? So first and foremost, we have to understand one instrument which is known as NCD. But then what is an NCD? In this section of the video, we are going to focus on three major points. Number one, what is an NCD? Number two, what are the expected returns from NCDs? And number three, equity or debt. What should be the ideal choice of any investor? Well, if you feel that you already know about all these things, you can just directly skip to this timestamp. But if you want to know more about these points, just keep on watching the video, right? So first and foremost, what is an NCD? NCD is nothing but a non-convertible debenture. It is a debt instrument. And the moment I'm saying it's a debt instrument, the returns that you get are consistent, they are fixed returns. Okay, that first point is absolutely clear. Now, second thing is, okay, I agree that I'll get consistent returns or fixed returns, but generally how much percentage? So, generally for NCDs, you get returns in a range of 9 to 11%. But again, I'm using the word generally because returns may vary from issue to issue, right? Now, the third point is that for an investor, how do I make a choice? Do I invest in equity or do I invest in debt? For that, let's take a simple example. Assume that this is a company which wants to raise money. Now, this company can use either or of the choices. They can go ahead with raising money via equity or raising money via debt. Here is an investor who wants to invest money. Now, what will be the similarity? Even if he purchases equity shares or goes ahead with buying NCDs, finally, whatever security he is going to buy, that will get deposited in his demat account. That is the similarity. What is the difference? Difference is that if he invests in equity, he is not going to get consistent returns, no fixed returns. But if this person is going to invest in debt instruments, something like an NCD, this person is assured of some fixed return. The point that I mentioned, somewhere between 9 to 11%, let us say, right? Now, the last final point comes is that what can be a better choice for this investor, whether equity or debt. Now, for that you have to understand, before I move on to that, one simple clarificatory point is that 9 to 11% agreed, but these returns percentages, whatever are mentioned in the document, these are the returns if you hold on to the instrument till maturity. If you sell off the instruments before maturity, then there can be a fluctuation in the returns that you can get. This risk is known as an interest rate risk. If you want to know more about this in detail, I've already covered it in a separate video. You can surely check that out later. Okay, moving back, how to decide equity or debt? For that, you need to understand and analyze what is your goal. If your goal is short term in nature, say within a year or within 2 to 3 years, then it's typically a short term goal. In that case, debt can be a better choice, right? But if it's a long-term goal, something like a retirement planning, or you want to buy a house in next 20 years, in that case, equity can be a choice of preference. Now, whatever we have understand, let's try and implement that practically. So, here you can see on the screen, YouGrow Capital Limited's public issue of NCDs. So, I'm going to explain all these concepts with the help of this specific public issue of NCDs, right? So, first and foremost, okay, we have understood that they are going to come up with this NCD, agreed. But what type of NCD? So, for that, what I'm going to do, I'm going to take you to page number 7 of this prospectus, right? So, I'm sure everyone knows that there is something like an RHP, red herring prospectus for equities. For debt instruments, we typically call it as a prospectus, okay? It's only a 423-page document. So, whenever time permits, you can go through this at your pace. But whatever are the important points of this prospectus, I'm going to highlight it for you, right? So, here if you see the issue, it's on page number 7. It's very clearly mentioned that it's a public issue of the company and it's secured, right? It is listed, it is redeemable. Again, I'm mentioning, I'm not taking you through each and every word of this 423 pager document. I'm going to give the link of this prospectus in the description box as well. So don't forget to check that out completely. But as of now, let's focus on the key points. Now, whenever I'm saying it's listed, okay, it's going to get listed on the stock exchange on BSE, NSE, agreed. It's going to be redeemable also. So whatever money I'm going to invest, I'm going to get back my money. Important question is, if it is secured, secured means what and how much secured it is. So for that, let me take you to page number 273 of this document. Now, if you see here, you can see security cover, and very well it is written that it's secured to the tune of 120%. So just as an example, if they are collecting 100 rupees via this issue, they have 120 rupees worth asset cover for this specific issue, right? So that is about the security. Now, going ahead with this point, that if I were to invest in this NCD, what would be the minimum amount? What would be the ticket size for this? So for that, taking you to page number 269 of the prospectus, here you can see that it's very clearly given minimum application size is 10 NCDs. So you can see here 10 NCDs, face value is only 1000 rupees, right? So minimum 10,000 is what you have to apply if you were to apply for this, but thereafter it's only one NCD. So can you apply for 12,000, 13,000, 14,000? Yes, why not? 14,500? No, that's not allowed, okay? So minimum is 10,000 and then there ahead multiples of 1,000 rupees. Now, okay, chalo, I understood. Assume that this is an area which I have never invested in, and assume that I want to just test the waters in this new investment avenue with only 10,000 rupees. Next question that pops up in my mind is there any specific maturity period for this? How much rate of interest will I get for this issue? So for that, let me again take you to page number 282 of this document. I'm saying all these numbers aloud so that whenever you want to cross check, it will be easier for you to catch up with the data, right? So if you see here, they have three different series of this NCD, series 1, series 2 and series 3. Now, what is the frequency of interest payment? If you are going ahead with the series 1, you will get quarterly payouts. For series 2 also quarterly payout, and for series 3, it's a monthly payout. But then you will be like, what is the difference? See, difference you can see in the coupon rate as well and in the tenor. Tenor for the first series, it's 18 months. So basically your principal will be repaid to you after 18 months. For series 2, it is 27 months, and for series 3, it is 36 months. So assume that you are fine that even if your money gets locked in for 3 years, then you may go ahead with series 3. Why? Because here the coupon rate is highest, that is 10.5%. For series 1 and series 2, it's 10.15% and 10.35% respectively. Moving ahead with the ratings for this public issue of NCDs, Acute and CRISIL both have given the rating. Acute has given a rating of A+, CRISIL of A-, but outlook given by both these rating agencies is stable. Now the next question is, how big is the issue size? You can very well see on page number 4, the base issue size is 5,000 lakh rupees, that is 50 crore rupees. But out of this, how much is available to the retail quota? For that, you can see that on page number 3, it is very clearly given for the retail quota, only 25% of the overall issue size is allotted, and that too on a first come first serve basis. So to understand first come first serve, we need to know what is the issue date for this. So let's come to page number 39 for this. So issue opens on 5th of September, just opened day before yesterday, and it will close on September 22nd. So if you intend to apply for the issue, be sure that you apply as soon as possible, because this is on a first come first serve basis. With that, let's move on with the financials of the company. Now moving ahead with the financials of this company, you can clearly see that there is an increasing trend in the total income, in the interest income as well, and even if you go to profit before tax, you can see profit before tax is also in an increasing trend. So after understanding revenue and profitability, let's understand how much is their AUM. So for AUM, you can see that it stands at 3,655.7 crore, which is definitely a decent enough number. Even if you check their net worth has been increasing continuously over the period of 2021 March ending till date. How about the CRAR? CRAR stands at 27.93%. Now, is this number fair enough or not? For that, you need to understand that RBI's minimum CRAR requirement is only 15%. So they are well above the minimum requirement. Moving on to the last point which I wanted to cover on page number 17 is what about their gross NPA? Their gross NPA stands at just 2.13% of the total loan book. I think this is a very much comfortable number. But then question is that where did I find this figure? So for that, I'll just scroll up and you will understand that these points are highlighted in the risks related to our business and our company. So whenever time permits, you have to read this page number 15 and onwards so that you can take an informed decision after understanding all the risks related to this. Now let's try and understand how can you apply for this issue. There are 2-3 ways through which you can apply. So let's start one by one. The very first one you can go is head on to the fixedincome.com, and here on the home screen itself we can see Ugrow Capital Limited, right? And this is the NCD public issue that we were talking about. You can just scroll down here, you can see series 1, series 2, series 3. We have already talked about all these points, right? So here assume that I want to apply for the series 3 issue. If you remember, this was a 36 months wala issue. So I just click on apply bond. Then you have to enter your basic details like PAN, DMAT, email ID, mobile number, everything. Then you will have to enter your UPI details, and once you do that, you will have to hit place order. Of course, you will have to go to the UPI app, the Bheem app, or if you are choosing some bank like Axis Bank or ICICI, HDFC, whatever, you will have to go to the bank's app and then you will have to authorize the transaction so that the payment will be complete, right? This is possibility number 1. Possibility number 2, I am on the tipsins.com website and I have gone into the downloads section of this website. If I scroll ekdam at the bottom, you can see Ugrow Capital Limited NCD form, and here you can download up to 25 forms. You can just click and then hit download form. What you can do is once the form is downloaded in the PDF format, then you can just fill it physically and you can submit to any of these banks which are authorized to take these applications. And the last possibility to apply for this is through your brokers portal as well. There are some brokers who are supporting the application process for this issue. Well, I hope you enjoyed this video. If you found some value in this, don't forget to share this video with your friends. Don't forget to check out the link in the description box. And also, as I mentioned before, if you want to test this new investment avenue, maybe you can consider investing at least the minimum amount of 10,000 rupees. If you want to learn more about bonds, you can click here. Till then, take care. Jai Hind and bye-bye.